Startup Unscripted. The questions you have with the truths you need to hear.
And now your host, Michael Dinsio.
All right. We are in studio today. High
Up
five,
top, baby.
Nice to see you, buddy.
You too.
Mike Dinsio here with Next Level Consultants. But as you all know, you are tuning in to Dental Unscripted, the startup series. So Startup Unscripted. And we're excited today. Well, I'm excited today because I've done 2 live interviews.
Okay.
You're local.
Okay.
And this is
number 2.
This is number 2.
This is number. I didn't get the number 1 slot.
No.
We were the first ones to talk about it doing live in studio, but you decided to test it out with somebody else to make sure it worked.
Yeah, I had
before coming in and stubbing your toe, trying it for the first time.
So exactly right. Guys,
I'm honored to be in the top 5 of live.
Top 5 live. Top 5 live. Well, good. I'll introduce you in a second.
Yes.
Folks, thanks for tuning in. So this is, of course, the Startup series, and what we're doing, if you've been following along, so kind of season 1, right? We ran from the top of a startup, the beginning process, and worked all the way through, and that was all of, I think, 2020 when COVID started, and it was just kind of a crazy time for all of us. And we've been dripping episodes out, but I decided to start it back to the top. So we're going back. Today we're talking lending, and lending is one of those first pieces that you need when you're starting this journey. And I have a special guest because Matt with Bank of America is here in studio. And he represents the bank today, and we're going to get into some fun dental lending stuff. And you guys know that I have a ex-banker.
Have you sat in this seat before, Mike?
I haven't ever been interviewed, but it never been in this seat.
This hadn't been invented when you had this
no,
deck.
It probably was. I just, no. 2012 when I was with the bank, and I'm sure there were podcasts happening, but I wasn't invited.
Right.
I wasn't as important as you.
Thank you. Yeah, I don't know about that.
So with that being said, let's, in true startup unscripted style, let's just get right into it. Today, again, getting into lending. Matt, give us a little bit about you and the bank, and just like that infomercial.
Sure.
Try not to bore too many people, because I've found that you guys fall asleep inside the first 2 minutes if we're not super exciting and fun.
Especially if I get into the weeds on this too. Right?
Don't start talking about interest rates.
No. Oh my gosh. Yeah. Which way they're going. Well, first, thank you for having me here, Mike. It's an honor. I remember talking to you after the first one, just impressed with your skills and ability, and my background way many years ago being in radio, and how hard it is to host and do something like this. So I'm happy to be here.
Here we are.
Yeah, here we are. We're doing it.
You do have a beautiful radio voice.
Oh
man.
my God. Yeah. Thank you again for that. You're just going to be lobbing compliments at each other the whole time, and people are turning out.
Yes,
I've heard enough.
Exactly.
No. Yeah. So the banking world where we're at today is, end of September 2023. One of the most important things I'd like to get across to people, and something I'm trying to communicate every single day when I'm talking to doctors who are looking to do this, is how attainable it really is. Mm-hmm. Right. Still, I think there's a lot of thought, emotion around the world today. And, you read the news, watch the news, wherever you get your information, whether it's a TV, radio, phone, or whatnot, that, maybe it's not a good time to do something business related, starting a business from scratch for the first time even. And if you believe everything you read and hear, it can sound really scary.
Yeah.
Right. And I would never try to mislead anybody that starting your own practice, your own business of any kind, isn't going to be hard. Right. It's going to be difficult. There's going to be challenges. You're going to feel every emotion under the sun that you probably can, but
still makes sense.
It's unbelievably attainable to do. Success rates, default rates, however you want to quantify it, have not really changed from pre-COVID, right? So when the doctor puts together the right team, builds a structure, has communication with those involved, at the end of the day, the universal thing I hear from doctors is, oh my goodness, that was unbelievably attainable. Why didn't I do it earlier?
Yeah, that's good stuff, man. Let's deep dive into some of that stuff today on the episode, but just big picture, Bank of America seems to be lending money to dentists. Tell us a little bit about the bank and what you guys are all about.
Well, so as you know, and folks out there, what the first product that Practice Solutions had long before we were part of Bank of America was a dental startup loan. That's really the DNA and the basis, the foundation of what we do. And we'll get into this over the next 30 or 40 minutes or so. And there's a lot of details that have evolved over that time that make it such a compelling product, and the success rate is what it is. But it all goes back to the experience in doing it, understanding the unique differences of a dentist as a business owner, what they need to be successful and what their businesses can support. And that's really the secret sauce, right? Over the last 12 months, we've had numerous enhancements to our startup product. And back to my point earlier about how attainable it is, the bank would not be enhancing the dental startup product if the success rate of the doctors doing it did not support it. Right?
Got it.
We've increased amounts, we've increased working capital, we've increased rent caps, all of the things that a doctor is going to need right now, we've continued to enhance. Yeah. And it's because of the success that doctors are having.
Well, guys, I think that kind of leads the whole episode, so we can get into some of this stuff. The truth is like doing a startup and starting your own business is challenging. And Matt said that it's very attainable, and it is. In my opinion, when I see a practice start and they go through the project and they're looking at their budgets and they're looking at their projections, and then they finally open up and that first payroll goes out, there is a bit of an oh shit moment, okay, and that's because, oh my gosh, this is actually
real. We're doing it. I've got bills to pay. Money's going out, not too much money's coming in, and so I wanted to talk a little bit about structure, because I think one of the things that B of A and you said the foundational history of your bank and how they started doing startups a long time ago, gave the bank a lot of confidence to give doctors startup money. There's some really big banks that do a lot of dental lending that are scared of dental startup loans. And so to me, I feel like your flexibility in the terms that you offer give these guys and audience, if you're thinking about it, would give you the ability to take off. Can you explain some of the structural things on a Mike Dinsio level, a dummy level here? Start here and work it. Well, as you said, it's about the beginning and as they build their business, right? And as simply put as I can make it, the goal in the design is to give the business the longest runway it possibly can have to build up to where it's going to be, right? It's not going to be where it is in year 5 on day 1, even end of year 1 into year 2, right? So having that runway, having that ramp up period, having that ability to be flexible to get to where it's going to be from a business perspective is critical. And having that detail to it is what allowed the bank to have the confidence to do it where maybe others haven't. So it starts with post-approval, post-lease negotiation engagement. When the project really starts, as you all know, and all the folks listening, watching will find out, yes, or they're going to find out is that it's a long project too, right? From the time you get approved to the time you finalize your lease and actually get started, it could be 4 to 6 months, right? And then another 6 months plus to build the practice, right? So
sometimes longer.
Sometimes longer.
If you're in California, longer.
So I lost my train of thought there. So that amount of time to get there is important and not something people expect all the time, right?
So the first part of the loan, I think, is really key. What Matt's talking about is that project phase and the bank's ability to give you a chance to build this practice out, get all the pieces in play. And we're going to interview a bunch more people that will talk about all these pieces to come and some past interviews. But how the bank lends the money during that.
Yeah, the project period. That's where you touched on it. So the first step is the project period, and we give a doctor to start 10 months to build out their project. During that time, we're making payments to your vendors. You're paying your bills. The process is starting, but we're not going to require a doctor to go into repayment on that.
Got it.
And that's the first
Like
piece of the secret.
during the project, there's no payments.
There's no payments, right? How should you make a payment on something for a business that hasn't opened yet and started generating revenue?
Yeah.
And that's a really key factor. 10 months, in this day and age, do you always need all of it? Hopefully not, but sometimes even then some. And there is flexibility to extend beyond that too. Then you transition from project period to repayment period. And that's where the evolution goes.
That's where the scary
oh no,
yeah.
I gotta pay somebody to answer the phones. I've got to pay somebody to help. Oh my goodness, I'm doing all these marketing efforts. I'm listening to everything that Mike and his team have to do to help drive business here. But I'm not generating 100 patients a month just yet to bring the revenue in.
A lot of money going out, payroll, marketing. You just said rent.
Yep.
So you've got all these payments going out.
A loan payment, right?
And a loan. So all this is happening. You guys give tons of working capital to cover this, but still the account's dwindling.
Right. And so to help offset that, the graduated repayment process is really the secret sauce here. And we have a three-tiered step to do that. Year one, your minimum monthly payments are going to be interest only on it. 12 months where you're making the smallest monthly payment that you can on this.
And again, there was no payments during the project.
That's correct.
But then once you officially open, that's when payments start.
So you're a year into your loan, right? Sometimes before you're even making any repayments on it. And that gives a lot of flexibility to execute on the strategies you're building for your doctors as well.
Okay, so interest only in the first 12 months and then I think it ramps up from there.
It ramps up. So year two is a 50% principal plus interest payment. Year three, 75. It's not until year four that your minimum monthly payment is a full principal and interest payment. And I'm sure you talk to your doctors by year four. I mean, you're generating the revenue. If you plumbed 6, equipped 3, you have operatory 4, 5, and sometimes 6 in there because you're operating at capacity and you're more than ready to support a payment like that.
I want to talk a little bit about the cash flow, like not just the ramp up, but like what are some things we can do in the budget and you and I talk a lot about things on our projects about how we can reduce the cost of the project. But because there are a lot of there's a lot of things we can do during the project phase to essentially make those payments even smaller by managing the project. I want to get into that, but I do a lot of projections for docs because they want to see what that first 6 months looks like. And what's really interesting about that is when you look at year 2, it's usually the hardest year cash flow wise.
Yep.
I know you know what I'm talking about. Why don't you describe that? Because I think it's really interesting that startups are freaking out about that first year, but it's really the second year that can be tighter.
Well, and there's a lot of factors that go into that, right? We talked about the graduated payment on the loan process, and that's where it's stepped up from interest only. So on the cash flow side of things, dollars going out has increased. You've probably hired a hygienist and assistant by then, so your costs for labor have gone up as well too. So the expense side of things has gone up, and while the cash in has increased, it's still in the growth period too, right? So it's the ratio side of things gets a little bit tighter there. To your question about controlling the budgets, I think there's the way I like to explain it is we want to get you as much money as you need to do the project.
Need is the key.
Need is the key.
Need is the key.
Yeah, we don't ever want to we don't want to slash and cut to the point that you're not building the practice that you're proud of and that you dreamed of and you want. But to the year two comment you're explaining there, we also don't want to go over budget too.
Mm-hmm.
So you're feeling the stress of something, 2 years down the road.
Yeah. Right. Yeah. No. What's interesting is Matt timestamped this episode in the beginning of it. Construction costs are wild right now, a lot crazier than when I was in your chair. So having to get a little creative in certain things and is definitely needed. But you guys did increase your limits, which is great. A lot of the banks did over the last 12, even 24 months, which was huge. No default rates. Yeah. So you raised all that. You raised your limits, and you still haven't seen any.
We haven't seen a change on that front. And you're kind of leading me here to something that I think is the most important part of doing a startup.
Okay.
Everybody is going to talk about having a plan, being a good communicator, communicating with the team that you assemble, and all of that is unbelievably important. In my opinion, and in the most successful startups that I see, not just having the communication up and down with your team, but assembling a team that communicates very well laterally beneath you, right? Your consultant, your contractor, your equipment specialist, your banker, everybody that's involved being able to communicate together for you and on your behalf is what's going to allow for the creativity that you're touching on right now. The conversation of how do we go execute for a great practice for Dr. Bob, Dr. Sue, whoever it might be, right? And go do it. And it's something that I think is taken for granted a little bit, or maybe overlooked because there's so many other things. And if you build a team that communicates that way, then the other problems you're thinking about and worrying about, they start to solve themselves.
I've had clients that like they're like, why is Matt talking to Mike, and why am I not CC'd on this stuff, or or I need to be making decisions. And don't get me wrong, like that's a very important thing for your team to be communicating and that you're making decisions. But when it's scheduling, when it's something's not working well, it's really important that your team does have that flow, that trust, that the acumen of the industry that helps you.
Oh, 100%. I mean, we're all in it for the same thing, right? We're all in it for our doctors, our clients, those that we work with, to have a great project, to have an efficient project. And the communication does come full circle. I know you do, I do, the folks we work with do communicate back to our doctors, and they are the ultimate decision makers, and they do. It can be an efficiency side of things as well, right?
Totally.
We can take a lot of things off the plate of our doctors by doing that for them.
And most of my clients are like married, have kids.
How many clients have you had that they've just gotten married? They're a couple of years
just had a baby,
or are about to have their first baby, and they're doing all of this at one. And it's it's so cool to work with folks who can take on all of those things at one time
and still nail it,
thrive, right? And thrive. And it's really cool.
And that is a tribute to the team that they assemble. And you're right. It's kind of funny. There's a joke at Next Level. I'll bring you in on it. So it's the strangest thing. When we take on a client, they somehow miraculously get pregnant. And it's like, dude, like I
don't know if I want to touch on that. The how and the why. We'll talk about our why.
I don't know. They just get excited about their career and they're just excited in general. I'm not sure, but it's true. Like, family planning is a huge part of my everyday world as a consultant. And you're right. It is really, really interesting how all this still works out very well for them, even though they're doing all these things.
And it's, they're the majority of folks doing a startup, they're at that stage in their life where up until that moment, the single biggest things that could happen in their life is starting a family and all that goes into that, and starting a business, right? And
which is huge,
right? It should be treated with the same respect and due diligence and care that all of them do, because it sets the path forward for the rest of their lives.
You know what's interesting, Matt? Like the last banking interview I had, I asked the gentleman this question, and I want you to answer honestly, because I feel like in general, this is the hot seat question, by the way.
Is it?
Be ready.
Is that why you turned the fan off?
That's right. I wanted everybody to hear this crystal clear.
Okay.
It's actually not really a hot seat question, but like, do you like when my grandfather talked about getting a loan for the business that he started, and my father told me what he had to do to get his loan? What's really interesting is they had to present a plan. They had to go into the bank. They had to have a conversation with a senior vice president like yourself and just basically lay the plan out and say, hey, Mr. Matt, I want to do this. I want to do this. I want to do this. I need this much money. Here's how I'm going to pay you back. Mm-hmm. Here's my collateral. Here's the plan. Right. And I'm going to call out folks that might be listening to the show is if you're not prepared to do that before someone even comes to you and mm-hmm. asks you for money, I feel like you're missing something. So the hot seat question is, do you feel like they could come to you more prepared?
The doctors?
Yes.
There's always examples of doctors that could come more prepared, of course.
Yeah.
I led you. No, you'd look me right in the eye and say, you're absolutely full of it. If I said, no, every doctor comes to me and is absolutely prepared.
I wasn't going to let him to get everybody kudos.
No. But quite honestly, and this is the truth, in this day and age, more and more every year that goes by, the doctors are more and more prepared than they were the previous year. And
I agree with that. Yeah,
and you know, I know I'm sitting here with Mike Dinsio on Dental Startup Unscripted, right? But it's a proliferation of information like this that's readily available,
True.
Right? And it's an unbelievable value to the doctors and those who are out here working in this community that it leads to that, right? And it is the truth. On the other side of things, you know, because I think you know this too. I don't require a business plan for a doctor to apply, and some do. I don't. And I would never discourage a doctor to not do it. Never call it a waste of time. It's unbelievably valuable.
I require it for my clients.
Sure. And this is why the doctors, by the time they get to me, are so much more prepared because they watch your podcast, they talk to you, you require them to do it. Yeah. You know, you're making my job way too easy.
Exactly.
Let's edit that part out. Right? My job is unbelievably difficult.
It should be. It should be.
Yeah. No. It's an interesting question and point, but you're right. They're becoming more and more prepared.
No,
sure.
I have to agree with that. Even though I was a little extreme in my example, it used to be that someone would call me at the bank 15 years ago, and they would just be like, "Hey, Mike, I want a loan, and how do I do this?" And I'm sure you get those calls.
I get those calls. Absolutely.
And you will help them.
Right.
But I would challenge the audience to not do it that way. Go to Matt and say, here's the plan. And can you give me the money? And he'll be like, heck yes.
Of course.
Yeah.
Yeah. No, of course it might be too strong. But you know, I don't know if you ever used this analogy before, but I use it with doctors all the time. You know, how does doctor run the business of being themselves in their personal life, right? Mm-hmm. You know, how much are they working and earning? Mm-hmm. How are they managing debt? How are they saving the things in their personal lives? Because these are individuals who've never owned a practice before. They don't have a business tax return. They don't have a P&L to demonstrate to the bank what they are able to execute on,
True.
Right? Yeah. So what are the decisions these folks are making?
Well, that's what I was
personal lives.
Let's reverse
right?
that. Let's reverse that though. Let me ask something in a different way. What are the pitfalls of folks coming to you where you say no, or it may be borderline no?
Yeah.
Are there things they can do before they approach you other than a business plan?
I'm curious to see, because I want you to, after I answer this, I want to get your perspective on how much this has changed or evolved, if it at all too. And when we're all out there working and speaking and educating, you know, our future practice owners, we touch on all of these things all the time. The first one I think that happens is how they manage their student loan debt. Right. Now, this has changed a little bit in the last 24 months because of all the programs out there post-COVID that allow doctors to, you know, take advantage that the government has offered. But, you know, having a significant amount of student loan debt can be a burden.
It
right?
can be.
And there's an emotional response to just pay it off as fast as possible. But there's a difference between student loan debt and credit card debt, good debt and bad debt, right? So where student loan debt is good debt in the eyes of the bank, right? So if a doctor's out there working hard, working 4 days a week in an associate position, corporate or private, doesn't matter. They're making a pretty good living, right? And they have an ability to pay off their student loan debt quicker if they want to, right? And especially where Mike and I live in Western Washington, it's not an inexpensive place to live too, right? So you start doing that, and then you start racking up credit card bills because it's expensive to live too, right? And that is a pitfall we try to help avoid.
Okay, so college debt and how that's managed. Credit. I heard credit cards. What else?
And then the savings is a part of it, because it's all full circle, right? You're bringing money in. How are you saving it? How are you managing what you pay for, right? And if you're using it to pay down your student loan debt, it's a very understandable thing to do, right? Your personal liquidity situation takes a hit, right? So your living situation takes a hit. So you start paying bills and racking up debt on credit cards that you're not able to pay off every single month, right?
I got you. Okay, so you do want them to have some cash. And you don't want them to have too many credit card bills.
hopefully zero at the end of every month, like zero. Pay it off in full every month. That's the ideal.
Well, they're gonna hire me, so they might have some. But
well,
I'm joking.
But we know about this. This is so when we talk about the sequence of things, right? How you make decisions. Why banking, and not just because I work for the bank, and not just because Mike used to work for the bank. Having a conversation with your potential lender and making some of those decisions at the beginning of the process can help with all of that, right? Because we can look at marketing and consulting as part of the budget and the startup program, right? So they don't have to take a hit or put fees like that onto a credit card and not have the ability to pay it off.
Okay, so saving some money, managing through the what about production? Like I know on the acquisition podcast, I talk a lot about like the fit. So someone that produces $700,000 a year or whatever it is, and then we're looking at a practice that might be, producing 700, and that would be a good fit. From a startup perspective, obviously you're starting from zero and growing from there. Is there a production requirement? Is that a good thing to know or present to you?
Yeah. Well, so we don't look at production per se. It's more about earnings, which is a direct corollary to what they're able to produce in a clinical setting, right?
Okay.
And the difference between a startup and the purchasing of a practice scenario and how it relates to the relationship the doctor has with their employer can be very different too, right? So, if you're an associate working for a doctor to start up, you might want to keep your plans close to your chest a little bit, right? So getting and collecting production reports might not always be an option. So we look at the salary as a direct corollary to what they're able to do in a clinical setting.
That's cool. Yeah, I gotcha. Okay, so we have covered team. We've building the right team. We've covered the structure of a loan. Then we just talked about how to qualify. Tell me a little bit about let's talk about some of the stuff that not only how to qualify and what are the pitfalls and challenges with qualifying. We covered that, but what do you see on the back end? Of course, you have folks what can people learn from best practices versus folks that are struggling right out of the gate as a startup? You do a ton of startups. We actually just went to a grand opening the other day, and that
beautiful practice too.
Beautiful practice, and actually we interviewed Chloe on the program.
Yeah, can we mention it? She was number one. We talked about me being number two. I guess it's fair that a client got to go first.
Yeah,
right? That's only fair.
Clients go first, Matt. Clients go first.
They absolutely.
So the first live interview was with Chloe. This will actually get published first. Actually, that's not true. Chloe's will get published first.
I think now we have to publish Chloe's first because we've disclosed it here. Yeah, it'd be awkward if we went the other way around.
That's true. But Chloe actually did everything good. Everything right. She just absolutely nailed it. Of course, there were some challenges along the way, like every practice, and she's off to a fast start. Matt, you talk to a lot of doctors. You do more startups than I do. So what are some things that you see folks do that put them in in tougher situations to pay the bank back.
Yeah, and I hope this doesn't sound too oversimplified, but it really is. When I talked about building a team that communicates well together on your behalf, the other side of that is trust your team too, right?
So give me an example of someone not trusting a team and things didn't go so hot.
Yeah. So, if as you're building out your office, right, the progression from 3 ops to start to op 4, op 5, op 6, what type of equipment you put in there. When we get to an approval for a doctor, the cash flow modeling in the first 5 years have been done, right? We understand what to expect the practice to do, what the repayment's going to be, both for the loan and on rent, and all those numbers that work. Now, when a doctor maybe takes a step outside of the advice that you would give them as your consultant, or the structure that goes into the approval of the loan, and purchases a piece of equipment or technology maybe a little bit premature, and takes out some other type of financing to do that, and all of a sudden now has another significant payment into their monthly cash flow that wasn't part of the original cash flow modeling, it starts to put stress on the cash flow that you're solving for. And in no way am I against technology in a dental office. It's couldn't be further from the truth. But the how and the when and where you get it, and building up the base of your patients and your business to support it is important too.
I'm glad you said that, Matt, because like a lot of the startups that I have helped, they come to me ready to swing.
They want to do it all on day one, right?
Grand slam.
Forever practice on day one.
They want to go for 10 ops. Well, this is an exaggeration, of course, but I guess I'll exaggerate a little bit just to drive your point home. And that's just they're just literally gripping down and trying to hit a grand slam, when really all they need is an RBI, right? And I'm not a baseball guy, by the way, but I'm going to go with this. But they literally are going for a grand slam, and baby steps are really important. And so, hell yes, we want technology. Hell yes, we want scanners and 3D printers and CERECs and all the things. Absolutely.
We want you to own the building where your practice is going to,
all the things. But like, let's just take the CEREC, for example, or a CAD CAM. Forget CEREC, but that's a brand. Let's just say CAD CAM in general. I always talk, I get in this conversation of like standard of care, like the standard of care is a 3D image. And I'm like, oh, okay. So the reality is that you might get lucky to get 30 new patients your first month. You're used to today working for a corporate office, seeing 30 in a week, right? Or in 2 days, if you're really busy.
Yep.
And so, like, out of 30, maybe 3 need an implant. Maybe. Okay. Actually, not even. Probably 1. Right. And so I guess the point is, to have all this great technology, you're at bats. You're not sticking with baseball. You don't have enough at bats to ROI that particular piece of technology. You'll get there.
Yeah. It's the crawl before you walk before you run before you sprint. And I'm sure you ask this question of your clients all the time, and it's something I try to bring up in my conversations as early as possible too, is let's talk about the process here. Let's talk about where you want to go. Let's talk about what your goals are, and understand that they can change, they can evolve. But if we're talking about wanting to build a practice that is highly leveraged on technology and can provide a certain type of patient care, let's put that into the plans we have now, so we can get there at the appropriate time and try to get there as quickly as possible. Same goes with purchasing commercial real estate. I mean, how many doctors come to you? I want to do a startup, but gosh, I can't lease. Why would I want to pay somebody else for something like this when I could just buy? Great. Totally. And we do have options where we can do that. If I do 40 startups in a year, which I probably do somewhere between 40 and 45 or so a year. I would say 1 out of every 5 asks about it and talks about it and wants to do it.
Yeah.
But of that 45 to 50, it's probably, 2, maybe 3 a year that actually do it. But my answer to that is I'm so glad we're having the conversation now, because the things we're going to do and the plans we're going to put in place now are going to help you get there. And whether it's on your first lease renewal or your second lease renewal, we're talking about it now so we can do the things to help make it a reality as quickly as possible.
What I love about bankers, and it's, of course, I'm biased because this is the world I came from, but what I love about bankers is they force you guys to think and talk and prepare for the business. Not everybody can hire a consultant. We're not a great fit for everybody, but you guys do help them on that initial prep and keeping them out of trouble when it comes to all this stuff. And so that's kind of where I want to pivot here. And that is, it still makes sense to start up. We've talked about this. Can we talk about the relationship that someone might want to have an open heart to? And that sounds like a weird thing. We're not in church, but like, I guess what I'm going for there is that, like, a lot of clients are just like, Matt, give me a loan and then I'm never going to talk to you again. Yep. It's not like your college loan or your car payment or even your mortgage, quite frankly. Most of us go get loans. We service that debt. We never talk to that person again. This is a business relationship, and you want it to be a business relationship.
Yep, 1,000%. Yeah, this very likely could, and for some should, be the first step in a 25 or 30 year relationship. We all have clients that are more transactional, and I have a conversation or two with them, get their information and get them approved on the loan, and never talk to them again. Yeah. And that's fine as well.
That'd be unfortunate, though. That'd be unfortunate.
But it happens, and everybody needs something a little bit different. But the banking products, the solutions, the way it's designed is, I look at this in 5 to 10 year increments over a 30-year time frame, because what you need is the associate, 5 years out of school working compared to 15 years into practice ownership compared to the last 5 years of your practice as you're getting ready to transition out, is all very different. And your partners that you choose, whether it's a consultant, a coach, a lender, attorneys, accountants, whoever it might be, should have that perspective of evolving with you, and the products and the services and the way they support your business change, because you need very different things at different times. And you're exactly right. For those that want that type of a relationship with the bank, that's exactly what we're looking for, and in fact actually helps us support the business even more efficiently.
I was actually thinking, like, the banks, in the history of me doing this, I find that the banks that are able to give some of the most competitive rates, and I would put you guys in that category, like, just from a basic business perspective, from a banking perspective, because I was an ex-banker, is like, you're not making all your money off of interest. You're making your money off of this relationship. And so I find that folks that don't have the most competitive rates, sometimes they're not selling the relationship as a whole, because it has value to you having this checking account, even the payroll stuff, the merchant services, like the portfolio of you giving a lot of your business to one bank can offer you some bigger discounts, is kind of where I'm getting at.
Yeah. And the word relationships is the key word. Yeah. Right. And frankly, it goes said with any business relationship, right? The more a relationship grows, the more you can get out of it, right? The more of a two-way street it is. And it's the same with your banking partner, right? And not just the actual nuts and bolts benefits that you touched on there too, but the ability to have a relationship with somebody and pick up the phone and have a conversation is important as well. And for me personally, in the way I run my business, I don't do every single thing from soup to nuts from the beginning of the project to the end. And there's a team that has expertise in certain areas, and I let them execute. But but I'm a resource for all of my clients, right? Post project into the life cycle of it. And I think more often than not, they'll say if they need something, just a question, just to get pointed in the right direction, they can call and ask.
Well, kind of back to the what I was saying, like, is that you went back to that trust conversation that we just had. You do have to trust your team, and that relationship does matter, because I have clients that are kind of aggressive towards their own team. Forget banking.
Yep.
We're talking about contractor, equipment, IT, bank, marketing, architect, consultant. They get very aggressive, and there's a lack of trust there. And I find that, like Chloe, for example,
do you ever feel it's confrontational a little bit?
It can be.
Yeah.
It can be.
Yeah.
And the interesting thing is like Chloe, who you guys just met in the series, she of course had the hard conversations to get her price and budgets in place, but everybody loved working with Chloe and for Chloe. And what's really interesting, and I got a lot of clients like that. What's really interesting is everybody will bend over backwards for someone that they love working for. You'll get the best deals when the client is appreciative and you like working with them. You'll get the best deals. But the person that is aggressive and confrontational and just it's all about the nickels and dimes, you're not going to get the best service.
And I would say it's even more about the service than the nickels and dimes, even, right? Because some point it is what it is too, right? But you're absolutely right about Dr. Chloe, and she's a phenomenal person. She built a beautiful practice. Her family is fantastic. That was the open house we were just at, and then we both go to a lot of open houses, and that was top notch, right? She would be an excellent case study in all of the things right to do with the startup.
Yeah. Well, I guess on that note, we are at our.
Are we at the end already?
Dude, it flew by.
It flew by.
This in studio stuff is I got to get used to it. I'm used to talking to people on the screen up here,
looking at it a little bit.
Yeah. But we are live, and people are able to watch us live and actually ask questions in the program, and so this will get posted like all of our other episodes, but we will continue to give you guys the schedule so that you could potentially be part of the program. Nobody asked you any questions, Matt, but we just started doing this.
That's fine.
Yeah.
I think we covered just about everything.
We covered it.
Right.
Well, any last comments, things?
I want to circle back to what we started off and say that if you're a doctor out there thinking about considering a startup, there's going to be a lot of questions, thoughts, things that you're going to go through, but the attainability of doing this has not diminished. The success rate and what we're seeing with our doctors has not changed. And for those that are willing to jump in with both feet, build a team, work collaboratively with them, it can be an unbelievably rewarding experience.
100%. 100%.
And thank you, dude. We've been talking about this for a long time. It finally happened.
It's here.
We're done.
And Matt had a background in radio, so I was a little intimidated that he was going to big time me today.
No. Radio, but not TV. And this is the blend between the two. So it kind of like I knew what to expect coming in, but then it kind of pushed me a little bit outside of it too. So
well,
many years ago.
Thanks again, man.
Thanks, buddy. I appreciate it.
What we're going to do is we're going to put any information down below to get a hold of Matt. I would highly recommend, if you have any questions about anything when it comes to business, if you're not hiring me, you need a guy like a Matt on your team that can kind of put the guardrails up and help you prepare for what you're about to take on. That's what a banker really does provide. And so Matt's contact information is below. And so again, thanks guys for being a part of the program. Follow us on Facebook, Instagram, YouTube. We've even got LinkedIn accounts. Like the show's really been taking off, and I just want to say thank you all for being a part of the program, and again, Matt, for attributing to it, man.
My pleasure, buddy.
My man.
Yeah.
All right, buddy. See ya.